Good evening, everybody. This is a good evening to be doing our our setup for the Triple T training, especially with the market doing what it did today. Kind of good illustrations to demonstrate the effectiveness of the T line. So the reason I like showing information about the T line was when I started candlestick analysis, I was so happy that I started turning my consistent losing into consistent winning because I was at least seeing the logic behind when to be buying and when to be selling, which was usually opposite of what most people do, which I normally did. So I was starting to make good money, or at least I wasn't losing money. But then when the T line came along, David, that's all kind of being combined in all of this. So don't worry, you're going to get everything. It's just that the market has moved so dramatically today that we've got more examples than we'll ever be able to handle. So what we want to do is, if there are tons, I think somebody said their scan for the kicker signal had 750 examples today, which on a normal day you might have 4. So anyways, just kind of follow through the logic of all this. We're going to be doing a Triple T. I think it was 750. Yes, somebody said they had 750 kicker signals showing up on their kicker signal scan. 1,200. Geesh. All right. So now I always get when we do one of these sessions and there's about 60 good trades, I get people asking, well, with so many, how do you pick out the best ones? And this is kind of what we're using for our confirming indicators, the T line. So I'll try to go through this fast because I got a ton of stocks that we will be looking at when we go to live charts. So the T line. That's right. I'll go through every one of them. So the T line has a very simple rule to it. T line is the 8 exponential moving average. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line. Now this is kind of the setup. This is why I'm trying to show the T line, because we will be doing a Triple T training, not this Saturday, but the next Saturday, November 19th. It will be a full day training. And essentially what we will be doing is going through hundreds of charts of all the different signals and patterns that develop from candlestick signals. Now I forgot what I was saying. So we're going to be going through hundreds of charts so that your eye now becomes very accustomed to seeing the signal, the T line, the pattern setup, everything that would indicate you've got a high probability trade setup. So here is the one truism that everybody should always keep in their mind. That if you see a candlestick buy signal or close above the T line, the probabilities are extremely high. And now you always stress the word extremely high probability the uptrend is confirmed. Same scenario on the downside. If you see a candlestick sell signal and a close below the T line, the probabilities are you've got an extremely high probability that a downtrend is confirming. So we can take that information and say, all right, if we're in the overbought area, we can see when, let's go backwards. we can see the buy signal and a close above the T line, we know we're in an uptrend until we see a sell signal and a close below the T line. However, there is a truism that the further away you are from the T line, and notice where this one was starting to show a sell signal, bearish Harami, right at a level everybody else was watching, up here in the overbought area. Where should we think about starting taking profits? Right in here. Because it's showing that the probabilities are starting to go against us. It's probably heading back down to the T line. When would you go short? When it confirmed that it wasn't going to stay up above the T line. So that truism is that the further away you move from the T line, the higher the probability it's going to come back and test the T line. Why is that? Because the definition of a T line based upon what we can recognize is it acts like a natural support and resistance level of human nature. So the combination of seeing candlestick sell signals in the overbought condition that far away from the T line, telling us if we see any confirmation, we know where the next target is. Back here. That's just putting the probabilities much greater in your favor that you're starting to recognize when to come out of a trade. Or, again, the further away you move from the T line, the higher the probability it's going to come up and test it. So if you start seeing buy signals, at least you know where your first target is. So I'd like to point this out because I always tell people I was making good money just trading off the candlestick charts, but when we added the T line to our charts, I was making great money. So again, that truism. If you see a candlestick sell signal and a close below the T line and you're long, close out the position. The worst case scenario is it bounces back up and heads back up. You can always buy back in. So the use of the T line on a breakout situation is very well enhanced by the fact that you see a breakout. Maybe it was news, or you might not see this other than somebody in the chat room says, look at EBIX, it's moving up big. Do you buy here? Do you buy here? Do you buy here? How do you find out? You go to your 10-minute chart. You can be buying here, you can be buying here, you can be buying here, but look at the same criteria that occurs on your 10-minute chart. Up in the overbought condition, where are you? Look how far away you are from the T line. You start seeing sell signals. And what was another piece of visual information that told you get ready to start taking profits? Not only were you moving away from the T line, but where do most people buy? They start buying exuberantly at the top. And that will be illustrated in the graphics, the candlesticks. Yes. So if you're looking at the daily chart, do you think it's going higher? Do you think it's going higher? Do you think it's going higher? You have no idea. And what tells you up here, it's time to take profits, because up here, what do you have? You've got a big, huge green candle. So what would make you think about taking profits up here? Because it might go up another 20 points or whatever. That's where you go to your 10-minute chart and say, all right, where are they starting to sell intraday? And that's where you start taking profits, because what's our formula? You see a candlestick sell signal in the overbought condition that far away from the T line. Where do you think your next target's going to be? Back to the T line. So if you take profits here, what's your next criteria? Well, you see what happens when it gets back to the T line. Does it do a J-hook pattern where you can get back in? So that becomes much more clear when you go to your 10-minute chart. So if you see something like this, a big breakout, and you say, all right, I can see the wedge, I can see my doji sandwich confirming, let's buy. Oh, great, we bought in here, but now we got huge profits. What do you think happens when people have huge profits? Logic says they're going to take profits. Where does that occur? Same scenario. Look at the exuberant buying, and then what's our sell signal? Well, it's starting to back off. There's the beginning of our evening star signal. Where could we put a stop? Maybe right here. How do we get out with a little bit faster indication? Well, your 10-minute chart is starting to roll over. You flip to your 5-minute chart. Where would be a logical place that tells you the sellers are taking control? They came back down through these lows. So again, this is not rocket science. This is just the graphics, what normally happens in human nature once you get a big price move. Now you can just go to your 10-minute chart and say, all right, yep, they're starting to sell off here. Let's take our profits at this level. So this is where the T line on a breakout becomes a very powerful tool that anytime we know where the buying starts and knowing where the selling starts, we got a little bit better visual advantage knowing sell signal that far away from the T line at a level everybody else is watching. Let's start taking profits and see what happens when it pulls back to the T line. So the T line for me is what keeps my emotions out of my trading. Look at Myrna's kicker signal and a close above the T line. What was the confirmation? Traded positive. What was it telling us? It was confirming that the kicker signal was working or confirming, and it was telling us the T line was not acting as resistance anymore. Comes up here where it might pull back to. Might pull back to the T line. Now they gap it way down. What to do? Well, then you start seeing it trade positive, and then what was the final criteria on this chart? They never closed it below the T line. It is still going. This is what, and I say, keeps my emotions out of my trading. What is most of our trading bugaboo from? Our own fear, our own greed, our own emotional decisions. The T line basically helps you keep your decisions out of your trading. So today, we recommended buying PETQ on a positive open. Well, it actually, after hours, showed a bullish engulfing signal closing up here, which told us that if this opened positive, that we were probably going to have a kicker signal, which we did. This just gives you a little bit quicker insight as to what's happening as far as investor sentiment. So when do you get into a kicker signal? Well, right here we knew we could get in right away because we could see what was happening from the post-market trading last night. On the other hand, look at our kicker signal. Oh, it's some profit taking. What's that telling us? Tells us if they open and start trading positive, we can be buying because that profit taking is over. And why would we think it's still being heading higher? Because the kicker signal is your strongest signal. They gapped it up at the T line and went positive. You just stay long on this one. And the trend kicker signal. Look where we had a little kicker type signal gap up through the T line. What can we recognize when we see that strength of that signal? Here at the T line and the 50. Well, there's our proverbial J-hook pattern. And what's our trading, trading identification of human nature? When they come up through a resistance level, they'll come back and test it to see if it's going to act as support. If we see it's acting as support with a kind of gap up kicker signal, we can be buying right away because what's that basically telling us? Everybody's saying, well, it's going to support here at the 50. Let's buy. That's where the confidence comes in. Now look at this trend kicker signal. Big move. Didn't execute yesterday if you were buying it yesterday. However, notice where they opened it today, above the previous day's open in a strong bullish signal. You could have been buying immediately. So trying to narrow down to when do you buy when there's tons of things to buy. You're trying to buy the ones that already have pattern setups in progress. So if you were short Netflix, if we know that after a bearish candle, they're gapping it up above the previous day's open, what's the first thing you want to do if you're short? Close it immediately. Because logic says if you're in a downtrend, they shouldn't be gapping up above the previous day's open, especially down here in the oversold area. Close it out. Now it's the next criteria. You might want to start buying. There's a kicker signal. J-hook pattern setting up. Same thing on Amazon. You're short Amazon and it gapped up. Now we knew it was gapping up because as the market was opening, you could see the pre-market futures were up 600 points. Doesn't take a rocket scientist to figure out, whoop, they're going to be buying today. Let's get ready to cover our short position. Got one where it closed right on the 50 and they're gapping it back up at the previous day's open and going positive. You could be buying this because what are all the pieces of evidence telling us this is a good time to be buying? One, came up, came back, tested the 50. Now they're gapping it back up. What type of pattern can we see setting up? A J-hook pattern. What was our upside expectation? This move right here. I got 3 pots and Darren. Got 3 pots and Darren. I have 2 pots. Oh, 2 pots. Oh, 3 pots on. All right. I'm catching on. All right. So simple candlestick logic. We know that dojis tell you there's a change coming. What confirms the change? Down here in the oversold area. A bullish candle and a close above the T-line. What's that T-line tell us? We can stay long until we see a sell signal and a close back below the T-line. Except, what does this tell us? Well, we're too far away from the T-line. We better have a stop here someplace because if it comes down through there, where's it heading? Back to the T-line. So this takes that guesswork out of what's moving in the prices. All right, so that was kind of a promo to say on the 19th, got a full day training. That's where you put on 3 pots of coffee and you keep your little pajamas on. You're going to get a lot of information because we're going to go through hundreds, quite a few hundred charts. That if you've now learned what the candlestick signals look like, what the patterns look like, now when you apply the T-line to it, you have dramatically improved your probabilities of being in the right trade at the right time. Let's see. Oh, yeah. Becky's putting in the link. All right. Now, see if we can go to live charts. Hope I've hit this pretty close. Rick, I think we have. Okay. Will be recorded, yes. Yeah, so if you can't sit through the whole thing, you get the recording, or if you can't sit through it, you get the recording. The only disadvantage of getting a recording is if you've got a question, obviously you can't ask it right then. However, all right, Wayne, get the recording. There's nothing wrong with if you see something, you write it down, then you can, next time you come into the chat room or even email me, say, I looked at a chart XYZ and I couldn't figure this out. So with a huge move in the markets today, and most stocks up huge gains, what do you wait for pullbacks before getting in? Okay, let's go right to the markets. Yes, so this is a 1,000-point move, a 1,200-point move. Now, let me make this smaller. Humbug. Well. I'm not gonna. There's a trend line that was coming right down through here, and it was where the tops were that came just up above the 200-day moving average. But today's kicker signal in the Dow went through it. So what can we logically assess about investor sentiment based upon the fact that it broke the downtrend? You can see how they could never get back below the T line. And they're starting the next wave up with a kicker signal. That tells us it doesn't matter why the thank you, Kathy. Doesn't matter why they're buying. Obviously, today where they're buying because the inflation was slowing down or maybe moderating a little bit. Doesn't mean there's any major change of anything fundamental, but what moves prices? Investor sentiment. They liked that news. I say the market liked that news, and they came in buying. We can take that same analysis here on the NASDAQ. You can pretty much see there's a trend channel, but they just went from the bottom of the trend channel, now getting close to testing the top channel with a kicker signal. What do we anticipate from here? That if they go through this level, they're confirming the kicker signal. Now, the warning is this was up 761 points today. It can probably be pretty much assumed they're not going to be coming out of the chute with more strength. There's probably going to be some profit taking on the open. Then you have to watch to see what happens after the profit taking is over. So we have that same type of pattern recognition. Look at our classic pattern. Fry pan bottom, J-hook pattern, and what's starting wave 3 of the J-hook pattern? That kicker signal off the 50 and the T-line gap up through this level. Where do you think the next likely target is going to be? Up here. What does anybody know what the triple T-line? Now it's called triple T training. It's the T-line. Oh man, I don't even know where the term triple T came from. T-line trading. Not so much a bubble breakout on this one because it's well above, but it's a J-hook pattern breakout. No, it's T-line trading, something else. It's been so long since we named it, can't remember. All right, so what do we use the signals in conjunction with the patterns? That's not what I wanted to do. Oops. Well, come on. You can see what we were looking at on here. There's your kicker signal. Starting your uptrend. How long do you stay with this one? As long as it stays above the T-line. trade the T-line terrifically. There you go, Bill. Also, we're going to be going into how the 3T line works in conjunction with the T-line. I'm going to go through some of these pretty quick so we can get to some of the new ones. Look at what this belt hold told us. But if they open this positive, what was our pattern setting up? Another J-hook pattern. If another J-hook pattern was setting up, what was it telling us about this resistance level? Wave 1, wave 2, wave 3 was definitely going to take you through that resistance level. I use stochastics 1233. Now there's nothing set in stone on that. It's just one night, 30 some odd years ago. I sat because at that point 1455 was recommended, but I was a swing trader, so I wanted something a little bit faster. So all I did was tweak to find out what was happening at the bottoms, what was happening at the tops. That's right, I was only 8 years old at the time, and but I could recognize the bottoms and I could recognize the tops, and I wanted to correlate the stochastics with it. So it's 1233 slow stochastics. So we were already buying ALB because of this J-hook pattern, but then look what it did today. There's your trend kicker signal. Lithium was the same thing. There's our trend kicker signal, J-hook pattern, and notice, and here's another thing to definitely take notice of. Look where they pulled back to, right back to the T-line and the 50. Look where they pulled this back to, right back to the T-line. Now, the reason I point that out is because the T-line acts like a natural support and resistance level of human nature. And the reason we know it acts like a natural support and resistance level of human nature is because nobody has the T-line on their charts. And it hits there so often, or it tells you what the trend is going to be based upon whether it's trading above or below it, that there's a kind of a Fibonacci characteristic built into the T-line. So this is where you try to find as much benefit as you can using all the indicators. Look at our gap up doji above the T-line. That told us, number one, that there was a new dynamic because we're back up above the T-line. So what did we look for on the next day? If it opened positive, what type of signal were we getting? A doji sandwich, which would imply there's more upside, which would also imply they're breaking out through this level and that the T-line is acting as a support level. Now, how long do you hold on to this one? You hang on as long as it doesn't close below the T-line. Even if on some days it gets a little bit iffy, that's just fluctuation in the trend. And the trend doesn't change until they come back down through the T-line. Now, what is the most, I want to say, what do most people do when they've got a good profit in a trade? And I know what most people do because I did it whenever I had a profit in a trade, which was rare. Boy, I better take my profits because I sure would look stupid if I let this go back to be a loss. So I'm going to take my profits, even though I don't know whether this trend's over or not. That's where the T-line keeps you from letting your emotions make your decision versus what the chart is telling you. Now, what the chart is telling us is if you have confidence in what the T-line illustrates, that if it doesn't close below the T-line, you stay long, that keeps you in a trade. Now, if I've got 10 trades on each day, I don't want to spend a lot of time analyzing dozens and dozens of trades. So I've got usually maximize my trade number around 10. But how long does it take to analyze this one each day. Let's see if I can do this. Oh, still above the T line. Oh, still above the T line. Takes about 3 or 4 seconds to say, yep, just stay long, as long as it stays above the T line. That means if I've got 2 or 3 that are steady eddies, I don't have to spend a whole lot of time analyzing what to do. Each day I can say, up, stay long, stay long, stay long, stay long. Now I've got an evening star signal. Now I can take a look at it for more than 3 seconds and say, all right, if this one opens lower tomorrow, after an evening star signal in the overbought area closing right on the T line, it's time to take profits. What keeps me in this trade? If they open it positive and start trading positive. Meta. Would you even consider touching Meta with all the problems they're having? Somebody's buying it. So we don't have to analyze whether they're having problems or not. All we have to do is analyze whether somebody's buying, which in this case, doji gap up through the T line, stochastics coming up. What's just a quick visual assessment of where this one should go? Probably at least coming back up here to fill the gap. Let's see. Oh, so it did have some puts that didn't get closed out today. In this one, for example, Medtronics was a good short, well below the T line, but they gapped it up today. But look where they closed it. They closed it below where they opened, which meant there wasn't a lot of buying after they opened it. That means there's still a weakness here. However, it gapped up. But if we kind of assume that if the market was up 1,200 points and this was trading below where it opened, there wasn't a lot of bullish activity. And let's say tomorrow they open the market lower just because of profit taking, that might add to the selling. Now, where would I close this out? If they opened it up and started trading above today's high, that means that they're still buying, close out the position. Meta, let's, what did I just do? Somewhat of a scoop. You could make that evaluation, but right now, instead of analyzing as a scoop pattern, which it is, I'd be more analyzing that they could probably come back up here at least, and then see if you got a scoop pattern breakout. Now, what does that do as far as trading? Well, bought some spreads. I think bought them yesterday. And it was the 110, 115. I can't remember now what I paid for them. I think like $1.39, with the idea that if it moved up to the 115 level, that 139 would go to $5. Good rate of return. Did that on a few. We did spreads on ABL because of this, the strength of this signal or pattern. Had a belt hold, J-hook pattern, double doji sandwich breakout, and they were gapping it up. Lots of strength coming into this one. We paid $1. Okay, that might be it. Yes, it must have been $1 because I think today they were up to $1.69. All right, and so while we're on the spreads, same thing on Sedge. Look at the strength of this pattern. Right off the T line, they do a kicker signal, gap up kicker signal. And they took it up strong yesterday and brought it back here. Man, it gets a little bit doubtful. What was the strategy on this one? It had to open positive and trade positive, which obviously it did. So now you've got a gap up kicker. You've got a gap up again from a doji. You're through the 200. So I added some more spreads today, if I can remember what they were. I'm going to say they were the 310, 320s. No. One of them I did. Must have been 310, 320s, which would take you up here. I think I paid, can't remember, $3.25 for them to go to $10. How do you scan for kicker signals in toss? Mike, I think either that formula is in the little folder way down at the very bottom right of your page. See, there's something that looks like a cross. Right to the right of that is a folder. Look in there and see if the formula for toss kicker isn't in there. If not, I think it's already over there. Deborah, I did a November spread. That gives me to the end of next week. So could this move up into this area by the end of next week? Well, with these gap ups, it's got that prospect. Oh, God, I can't remember which ones I did. I paid $1.39 for something today. It may have been the 310, 320, for it to go to $10. Now, what's the risk reward on a spread? Even if it fizzles out in here and starts slowing down, I could probably still get out of it at a 89 or at 90 cents. Not a big loss because it's a spread, but if it does what it's supposed to, that dollar, what I'd say, $1.39 now could go to $10. How long did you give the, I did the Novembers next Friday. Does it make sense to buy a kicker signal first thing in the AM right after the open? If you identify it, yes. And there's two ways to identify it. One, that you're getting ready for it because, as I say, on this one, it was recommended because after hours, they must have reported earnings, and it closed up here. So it had a bullish engulfing with a booster signal closing above the 50, which meant it was probably going to open positive. And then when we wake up and see the market's going to open up 600 points, and this is going to open positive, you could be buying it right away. But there's going to be other times where somebody says, oh, is this one? Look, it's still moving, it's still moving. And you see something like this. That's the advantage of having a chat room where everybody's looking for the same type of signals and patterns. Because if somebody says, oh, look at EBIX, it's moving up big, and then you flip to your 10-minute chart and basically says, oh, yeah, it's gapped up off the 10-minute chart today. It's doing a doji sandwich. We can buy here. Now, it's already up and big, but this is the advantage we have with the graphics of candlesticks. We know the parameters. As long as it doesn't show a sell signal and close back below the T line, you stay in it. Or now when you're starting to move too far away from the T line in the overbought area, that's when it's time to start pulling the trigger and get rid of what I always had, that FOMO, fear of missing out. Well, I'm not going to take profits. This might go up another 10 points. I'm not going to take profits. Oh, man, I should have taken profits. At least this is now giving you a very clear visual of when you should be taking profits. So there was only a couple all day that still traded lower. This is not the right chart. Look at what your T-line was telling you about Silvergate. There's our dumpling top. There's our gap down. It opened positive and thinking, all right, maybe it's time to close out. Well, now they're starting to trade it down a little bit, trade it down a little bit, trade it down. Well, they are not buying this one. So anyways, did I answer your question, Jake? 2 ways to spot a kicker signal. One, somehow you see it or it's on your watch list and it's gapping up. Amazon's always on our watch list. We can see there was opening positive. If you were short, you were covering your short. If you were not short, say, wait, they're gapping this one up, coming up through the T line. That's strength. Let's start buying that one because that has the makeup of a kicker signal. Now, that has the makeup of a kicker signal, provided you got a good strong green candle. So if I was buying right here and it was doing this, thinking, all right, I'm good, where should it not trade? It shouldn't trade back below the T line and definitely not back below where it opened, because if it did that, what's it tell you about your kicker signal? It's not there. There's no green candle. Close it right back out. It didn't work. Now, for every time it doesn't work on a kicker signal, you're probably going to have 60, 70 trades that are going to work. The kicker signal is your strongest candlestick reversal signal. Again, it's built in. The gap is already built into the signal that there's been a dramatic change of investor sentiment. Now, all this information isn't just kind of theoretical. This is from me watching what the logic, signals, and patterns should be doing based upon what the Japanese rice traders provided for us, and just identifying what was likely to happen based upon a pattern and a signal. So as you can see in the video, that was pretty iffy. Matter of fact, if I was long, I'd probably have closed out this position yesterday. But when they gapped it back up, what was it telling us about our T-line? They're staying above the T-line, and we're still coming up through this level. So that's how you use the T-line to make a much more accurate assessment of what's happening in your trend. We recommended MAC. This has been a good steady eddy. If you miss this move right here, look at our cradle pattern. Wouldn't be buying here. Wouldn't be. Let's make this big enough where we can see it. Wouldn't be buying here. Wouldn't be buying here. Whoops. Might be buying here. No, didn't. Oh, now I'm buying. Because what are we doing? We're coming off a cradle pattern, and they're not closing below the T line. If I missed wave one, look what pattern was setting up right here at the 50. There's your little J-hook pattern. If I didn't buy in here, I'm buying right in here because now I can see what pattern's setting up. Where do you think the next target's going to be? As long as they don't close below the T line, we're heading for the 200. NVIDIA is already in a trend, yes. But can you see a pattern in this, on this chart? I hope you can see a big fry pan bottom. And where does a fry pan bottom break out? Or what do you want to see at the fry pan bottom breakout level? You want to see a strong breakout. And what's your strongest signal? A kicker signal. So what can you assume about your fry pan bottom breakout? It's working. Now where do you think your next target is? Up here, because what's the assumption of a fry pan bottom breakout? A good strong price move. Went long calls on Adobe. All right. Yeah, there's going to be tons of. Yeah, that's more of your kind of your double bottom But there's your best friend breakout. And where are you sitting right now? Right there. What's this area tell you? No resistance, some good upside potential. Please clarify when a kicker signal has failed and where you should place a stop after the entry. Mike, if you see a kicker signal, if I was buying Amazon today on a kicker signal and I was buying right here, why? Because that's a green candle. It opened and it's trading positive. Where would I not want to see this trade? Definitely would not want to see it come back through the open, because what color would that candle be? Now it's just a big shadow and it's starting to turn red. It's not doing what a kicker signal is supposed to be doing. See if I can find a few more. Netflix, kind of the same scenario. If I was buying right here after it came up through, if it came back down through the open, I'm closing it right back out, because the strength should be telling us we're going in this direction. Guild. So here's that trend kicker breakout. So here's where you add everything we know about the strength of a candlestick signal and pattern. Where is a pattern usually going to break out? Right about where it started. What do you want to see as a breakout? A strong signal. There's kind of your trend kicker signal breakout through this area. Now, once it does that, what's our assessment? Well, it's going to be up more. So there's a 45 degree, and how long do you hold on to the 45 degree? As long as it doesn't close below the T line. Hold on to your individual ones. Let me get RKLB, a failed kicker. Pretty much, they say pretty much. You still have a kicker type signal. Now, this would have been another one that if I'd been buying and saw it heading up and then starting to back off, I'm thinking, well, maybe they aren't holding it up. Oh, boy. I'm going to hang on to it. Nah, let's close it out. Now, where is it? It's down here, but it did a kicker signal. So what would be our strategy based upon that type of setup? It better open positive and trade positive, or if I didn't buy it today and it opened positive and traded positive, you could be buying because you're working off a kicker signal. Kind of the same scenario on this chart. If you didn't buy it on this day, but you have a kicker signal, you can be buying it on additional strength. Jake, I haven't gotten that far because there's just so many of them. But I've got a few here. Let's see, we did Sedge. Sedge started that kicker signal. This is what we expect coming off a kicker signal. Same thing on the illustration of Myrna. Kicker signal, this is what we expect coming off a kicker signal. GNRC. There's your plain old obvious kicker signal. So now, what's my upside potential? Well, there's a gap right up here at the 34. Is that worthwhile? Yeah, that's a good percentage move. Or if I don't want to be buying a $100 stock, let's start looking at some spreads up here. Because at least we can figure out where the target is. Where's our target on this one? You can see the fry pan bottom. And you can almost put this in the category, I think, the Japanese rice traders. This is kind of an inverted head and shoulders. The Japanese rice traders call this the three valleys. But look what started the breakout. There's your gap up, breakout. Now there's your trend kicker, fry pan bottom. Where do you think this is going to? At least the next target that everybody else is watching. ACMR. Oh, why do I have this? Why is this over here? Because it's still a good chart. Look at your doji sandwich breakout. Kind of out of a cradle pattern. And where do you think this one's going? Well, there's one target. There's your gap to fill. So if you were buying down here off of this bullish doji sandwich, when it opened positive, what was that telling us? Got a doji sandwich setting up. Number one. Number two, what is it telling us about the T-line? T-line's probably acting as support. Three, it's not staying in this range anymore. That tells you got a new trend to the upside. There's your kicker signal on net. Now, where's your upside potential? Well, you can see there's this kind of resistance at the 50. So maybe I'm not buying the stock. Maybe I'm buying a 50 and selling a 55 spread. That might make a lot more sense because I've got less money exposed to the market. Big price move. I think, who was talking about this one in the chat room today? Somebody was. So if somebody says, oh, look at this, it's breaking out. Again, what do? You go to your 10-minute chart and say, how long do I buy this? I could be buying here. I can be buying here. Oop, I wouldn't be buying here. I want to see what it's going to do. Oop, might be buying here. Could be buying here. Would I take profits up here? Not necessarily, because when you're up here and you've only got a few minutes left in the day, what's your daily chart look like? It's staying right up here near the top of the trading range. Guild, when is a red candle body too small to be called the first of a? It doesn't matter. Let's see, which one was that, Guild? Whether you want to call, on this one, it's a trend kicker just because it was a small body, red body, and then I think it's a red. Colorblind, yeah. So that was a red body kicker. It's still a trend kicker. Now, if the body's real small and it gaps up, now it's not a kicker signal. It's a more of a best friend signal. So here's another one. Shopify. This is your typical trading. Came up through the resistance level that everybody's watching. Came right smack dab to the resistance level to see what's going to act as support, which it did with a kicker signal. Where do you think the next target's going to be? So even though some of these might not have huge percentage moves, good percentage moves, it allows you at least say, well, if they're heading up here, maybe I, again, buy calls or call spread. Uh-oh. Yep, we are going to keep everybody. So this one I wouldn't call a kicker signal. More of a best friend type signal. But it still has the same illustration. They've gapped up, reversed the trend, broke out. What's the implication? Still a lot more upside. And timing. All right. Somewhat of a cradle, not really. A cradle is between, is a downtrend, a flat, and uptrend. This is just more of kind of a J-hook pattern. We did JetBlue. JetBlue is what I would call observe the obvious. They supported right on The 50 did a kicker signal up, doing a J hook, classic pattern, a lot more upside. Oh, okay. All right. Uh-oh. BTRS. Okay. Terrible handwriting. Whoever wrote these down. Here's your best friend signal. There's your trend kicker signal. What's this imply? Still a lot more strength to the upside. Anytime you see a trend kicker signal, assume there is more upside. Overstock. Little kicker type signal. So what is the observation here? Bunch of dojis, kicker signal, closed right on the 50. The Stochastic's not anywhere near the, or just coming out of the oversold area. So what would happen? Or what's your confirmation? If this opens positive, what's it telling you? This signal is confirming and the 50 is not acting as resistance anymore. You expect a pullback tomorrow. If the pullback goes past the midpoint of the big green kicker signal today, would you stop out? If yes, if you had bought signals yesterday, if I had bought, let's say hypothetically, I bought this today, where should it be going? It should be going in this direction. If it opens lower and starts trading back below the halfway point, it's not going up. Close it out. So that's, yeah. Same thing here, except probably on the indexes, I probably wouldn't worry so much about coming down through the halfway point because we expect some profit taking. But if it does come back down through the halfway point, what do we do to see if it's going to continue? You flip to your 10-minute chart and see what it's, if it's basing or not. Okay. Oh, yeah. And see, I mean, I could go all night on the kicker signals. This is what you want to be looking for. When they start gapping up, that tells you there's a lot of strength coming into it. What is the use of the 3T line? The 3T line kind of confirms the T line. You can see some places in here where when they started trading it up, the 3T line never got back up. Let me make this bigger. Really got back up through the T line. But on this one, where they close above the T line, you can see the 3T line confirmed. So it's not a, it's just kind of a fluffy confirming indicator. On the other side, when you start moving way too fast away from the T line, now the 3T line now becomes a more effective indicator. The 3T line is a 3 exponential moving average. It also has kind of natural support and resistance characteristics. So CBRE, there's that best friend type signal breaking out through the 50 in this level. What would be the assumption heading for the 200? RXT. What type of pattern is this? This is your classic pattern. Your fry pan bottom followed by a J hook. And how did your J hook pattern start? With your best friend gap up through all this level. Where do you think the next target is? Up here. Kayla. Look at all the indecisive trading down here. And then your doji gap up. what would you do with this trade? If this starts trading positive, you can be buying it because you're coming off that best friend signal after a bunch of indecisiveness. I'm telling you, they've now made their decision. CBRE, because I wouldn't consider this. What you want to see on a kicker signal is a big candle. This is more of a, I want to say, doji spinning top. So it doesn't matter what you call it. It's still illustrating that gap up from a indecisive trade or a red candle. It still fits in that category. It's a strong reversal signal. All right. TXG. Can you see the pattern? Big fry pan bottom. And look at your trend kicker. And where did your trend kicker occur? Right here at the beginning of the fry pan bottom. Did I show Tesla? No, I didn't. I skipped those, didn't I? We did Amazon, we did Netflix. So anyways, this one. Now, what's the difference between a pattern breakout and a signal? A signal you want to see occur when the stochastics are in the oversold area. A pattern breakout is usually going to occur when your stochastics are in the overbought area. Tesla. Nothing here yet. But, oh, where did it go? It may still be down here somewhere. What is this setting up for? If this opens positive after the doji type day, what do you got going on? There's your bullish flutter kicker signal. You could be buying immediately. You missed Amazon. Oh, Chris. There's your kicker signal. If you were short, you would have covered it on a positive open today. If you're thinking of going long, you want to see the markets opening up and this one's opening positive. Where do you think your first target is? There's a gap to fill right here, and then you're heading for the 50. Now here is a flutter kicker signal. Notice you had a kind of a little green candle. They gap it down below the open and do a doji. Then they open lower and trade lower. It's called a flutter kicker signal because if you take that little flutter out, you've got a kicker signal. What was the other one? Oh, Apple. Another kicker signal. Now it's not as clean a chart, but it is a kicker signal. If you want to buy it, you probably wait until it gets up through the 50, and then you just have to wait to see what happens at the 200. Do you look at relative strength at all? No. Some people can put, I don't look at it because the relative strength is pretty much going to be built into the candlestick chart in itself, just the strength of the signal and the direction. Now, if you want to put RSI on, some people say, why don't you use RSI versus stochastics? Because stochastics have worked extremely well. Remember, there's a very simple analysis from the Japanese rice traders. If you see a candlestick buy signal in the oversold area, the probabilities are it's heading higher. So it doesn't matter whether you're using stochastics or RSI. If you don't know which one's better, put both of them on. See how they work together. No. Mike, Cornell football just is not something you would go out of the house to watch. Wouldn't even stay in the house to watch. All right, what else we got? GXO, can you see a pattern? Like a fry pan bottom? Breakout through the 50 and where the pattern began? What's your expectation? More upside. And Papa John's, fry pan bottom. Where's your next target? up here. Knowing what comes out of a pattern, and see how the pattern held up on the T-line all the way up? This is what we call a T-line crunch. Look how it kept pushing up, pushing up, pushing up until it pushed the trading right through a resistance level. And as it was doing that, look at the pattern it was setting up. So all this becomes a visual analysis that you can get a much more clear analysis of what's going on in investor sentiment based upon, is it trading back below the T-line? I know there's probably quite a few J hooks, but here's one on clean energy. Look at your bullish engulfing, starting your J hook pattern, positive trading. What would be the strategy on this one? The doji rule. If it opens positive tomorrow, you want to be buying because that tells you probably got a doji sandwich, breakout, wave 3 in progress. Okay, so AMAT, look at your Morningstar best friend gap up off the T-line and the 50. Where do you think the next target was going to be? Right here. Daku. This is one where if you were short and you saw it open positive, you closed it out. Now you could be buying, but what do you watch for? You want to watch to see if it can get through the 34, which is this downtrend, and see if it can get up to the 50. But if you'd been short on this one, you closed it out on positive trading. Again, what was your alert? That the Dow was going to open up 600 points, the NASDAQ up, what was it, 400 points? Probably everything was going to open positive. If you had short positions on, you probably wanted to get out of them pretty quick. So which ones do you go after? You look for the patterns. And what is the simple philosophy of the Japanese rice traders? Where do most people sell? They panic sell at the bottom. Now that was usually me, except now I can look back at a chart and say, what should I be doing right here? Well, I should be going short because everything tells me to go short. Whereas I used to be owning this and I'm looking and saying, man, when are they going to turn this around and make my stock go up? Now at least I can look back and say, if I own this, I should be out here. Or if I went short, how long do I hold on to this? Never closed above the T-line. And where is the, what's the philosophy of the Japanese rice traders? Where do most people sell? They panic sell at the bottom. Down here, some places where you start covering your short position. And now look what's happening. You got kind of a little cradle pattern starting to set up. So this one could be bought on positive trading. What's this pattern? There's your classic fry pan bottom, J hook. What's the J hook starting with? Your best friend signal, doji gap up. What's the defined term of this J hook? There's your bobble breakout. What's the expectation? Wave 1, wave 3. Matter of fact, you might see that on the recommended list tomorrow. Kind of the same scenario. There's like bobble breakout. There's your inverted hammer. There's your positive trading. There's your fry pan bottom or your 3 valleys. Be ready to buy this one. I don't think the market is it? I think the bond market is. But the stock market's open. Wheat, still in a downtrend. Look where your bearish harami occurred. Look where your bearish engulfing occurred. What is your overall trend right now? It's in a downtrend, but you're in the oversold area. So if you were short, where would be the best place to put a stop? Probably at yesterday's high, because logic says if you're in the oversold area after a doji and they're bringing it up through this level, they're buying. It's time to close out the position. I was trading lean hogs today. Because he had a bearish harami. It looked like it was trying to do a bearish doji sandwich, bring you back into this area. You came late. Oh, BC, the presentation, Jim's not here tonight, but Rick's here tonight. It'll be recorded, and you can get the link and watch it again. Okay, so the thing we have to watch out for tomorrow is you just had a 1,200 point day in the market. Oh, I don't even know what the market futures are still trading up a little bit. So you can see what the futures are doing. Kind of a J-hook pattern off the T-line. Still expect some more upside. All right, are there any general questions on candlesticks? Is the gap valid if the stem of today's candle overlaps the stem of yesterday? No, that means it's filled the gap. But the open today is above the close. All that means is, yeah, gap is, which one did we? That's a gap. Whoops. Let's see, there's nothing in here. That's a bullish chart. And it still has the implications of it gapped up, pulled back. So it's still got strength to it. It's just not a gap up. What one was that? Same thing here. It gapped open, back and filled, but traded positive. So there's still good bullish charts. You just wouldn't call it a best friend or a gap up. Travis, that I do not know. I don't know whether they had relative strength or they didn't have stochastics, because I think that was created in the 50s. But you could take everything off this chart except for the candlestick signals themselves, and you could trade very successfully, which they apparently did, because I always illustrate that the Japanese rice traders didn't become wealthy. They became legendarily wealthy. They were the financial powerhouse. And you got to remember, they were trading the most boringest commodity in the world. Jimmy, anytime you see a kicker signal, again, if it starts out, the implication is it should be going higher. So if you're buying intraday, you definitely wouldn't want to see it come back down through the open, because the open and trading positive was telling you where the bulls were taking control. If the sellers could push it back down through the open, It means the sellers are still in control, close out the trade. Now, if this opens positive tomorrow, I wouldn't want to see it come back down below the T-line. Now, what you could see, though, is it opens positive, and it's not unusual. It comes right down to the T-line. That's another little magical aspect of the T-line. If it does that, all you do is go to your 10-minute chart, and as soon as it hits the T-line, watch to see what the 10-minute chart does. If it starts trading back up, it means they came right down to the natural support level. If you want to be aggressive, that's where you can start buying. Okay. Oops, I kept us way over time. So let's try to keep it to one pick per person tonight. So Rick, go ahead and do the double line. And in 3.6 seconds, do the next double line. Las Vegas Sands. You can see that it's not very decisive, even though it's in an uptrend. So you stay long, you just keep your safety stop below the T-line. Kind of the same scenario on WIN. IGT, you've got the breakout. If you're long, you can stay long. If you're thinking of going long, wait for it to come up through this level to tell you this uptrend's in progress. If you're long now, you don't want to see it come back down below today's open. That will tell you it's moving in the wrong direction. Click, trend kicker signal. More than likely heading up here to the 200. AR. You're in a very slow uptrend. Obviously, there's your trend channel. You could be buying this, wouldn't be buying this one, but if I was long, I would stay long, and I wouldn't want to see it close back below the T-line. Uh-oh. Fat fingers, fat fingers. Another one you could be buying, got a kicker type signal, just doesn't have a magnificent trend, so if you're buying it, it has to get up through the 50. So this would be one that even though you've got a kicker signal, I think there's probably a lot better charts out there. AMD, there's your little kicker type signal. That one you can be buying. Micron, that one you could be buying. Kind of your fry pan bottom breakout with a best friend. Whoops, you did that. Oh, I didn't even see. All right. And apps, there is your gap up. Here's one where you would expect a 45 degree to come off of here. So you buy on strength, probably wouldn't want to see it close back below the 50. Snap. And nothing wildly exciting on this one, which means I'd probably be trading something else. Meta, stay long on this one. It does have a scoop type pattern. It does have a probability of coming up here and filling the gap, which gets you pretty close to the 50. Fiverr, that's a nice little fry pan bottom, slow curve breakout. That one you can be buying. You can see that it's broken through this resistance level, which was also including the 50, and it did it with kind of a trend kicker. I would suspect they're now heading for the 200. Now, that's all provided that this market doesn't all of a sudden fall out of bed. At some point, there might be a reality check that inflation hasn't gone away. It's just not it's not continuing up right now. Run, another slow curve, bobble breakout. You could still be buying this fry pan bottom. Stay long on this if you're long. Put your safety stop at the T line. Uh-oh. A, B, N, W. That's kind of an ugly chart too. If you were short, you would have covered the short. It really doesn't have any trend to it, so I probably wouldn't be going long on this one. Microsoft, not a real exciting one to trade because it's such a big institutional trader. But if you like it, you can be buying it. I'd be more buying it based on an option strategy. Disney. Uh-oh. Disney. If you were short, if it opens positive tomorrow, cover your short position. They're probably going to be bouncing it back up to the T line. PJs. I did Meta, right? That's a J-hook pattern. You could buy this one on strength. Let's see. We did Meta a couple of times. Scoop type pattern, probably coming up to the 50. Rivian. Nothing. But you do have a bullish flutter kicker type setup. If it does open positive, you can be buying it. You just have to get through a lot of this trend channel. Wells Fargo, trend kicker signal. If you're long, you just stay long. Cheesecake. J-hook type pattern. Best friend gap up. If it opens above this level, at least figure it's coming up here to test this level, so at least you're in the right direction. Citigroup, you could be buying this one. Anytime the big financials are trading positive, look at Goldman, wow. Whoops. JP Morgan, when the financials are acting strong, the market's going to act strong. Occidental, all of the oils were kind of consolidating a little bit today. So right now, I wouldn't be long or short Occidental, wouldn't be long or short Apache. ExxonMobil, same thing. They're in consolidation stage. Now you have to see what they're going to do with them from this level. Nail, that one you could be buying. Gap up. I think crude oil didn't do much of anything, and they've already had a good run. So crude oil is just kind of lollygagging right now, moving sideways. So a lot of the crude oil stocks or oil stocks, I mean, they had nice, strong runs. I think they're in just the profit-taking stage. QCOM is a good pattern. And you're back up above the T line. You're breaking out. I'd call it more of a double bottom than anything. SMCI, get ready to buy this one on a bullish flutter kicker. Positive trading tomorrow, giving you a J-hook pattern. Here was trading lower most of the day. So this definitely has to open positive and trade positive to stay in it. If it started trading lower, it's probably moving sideways, waiting for the T line to catch up. AVNT, another best friend, kind of double bottom. If you're buying, you have to watch to see what happens at the 50. Not your greatest looking chart, but it's heading in the right direction. Schlumberger, stay long as it stays above the T line. Halliburton, same thing, like the rest of the oils. Shopify was doing a gap up kicker. This one you can buy on positive trading. Your J-hook pattern off the 50, making the 200 your next likely target. Goog, you can be buying this one. Just watch to see what happens once it does get up to the 50. Obviously, the 50 is a resistance level. MLCO, is that one of the, oh, that's a resort. That's your bobble breakout potential because of the kicker signal off the 50. You can be buying this one immediately on positive trading tomorrow. And fry pan bottom on this one, at least figure the 200 is your first target. This was one of those where you've got a strong morning star signal. I'd buy on strength, expecting a 45-degree coming off of this one. And PL or PRTA, nothing of any great consequence here. If you were short, you would have covered the short, but I definitely wouldn't be going long yet. PAA, same thing. If you're long, it needs to open positive and stay above the T line. Okay. All right. How much more we got? All right. UHS. That's a nice J-hook pattern. That one you can buy. Yes, buy on positive trading. Okay. Just be aware that they could be opening this lower and doing some consolidating in the morning. Thanks, Darren. In the video we did, just stay long. Look at your trend kicker, bobble, or your fry pan bottom breakout. I would suspect they're heading for the 200. Oh, they did. Darren, they were, can't remember whether they were the Honshu family or whether they were on the island of Honshu. It's coming to me. Home HOMEO something family. Yeah, it's in my first book. The Pet Boys. Okay. So right now we've got to assume there's been a major change of investor sentiment. Just have to watch to see how long. There. Okay. Thank you, Travis. I think that was it. All right. We'll see everybody bright and early tomorrow morning. We'll see you then.